Good morning, everybody, and this is your SP 500 setups for today. And I see we've got a lot of junk on the charts. Before we start, let's just delete everything. Okay, so we basically plummeted through all the levels that I gave you yesterday, which was a great shining example of my levels. And we promptly bounced off something to the downside. We'll find out now, but it was pretty much a big up and down day. Nothing really to write home about. The thing that is true, and the thing that will always be true, is when we're between these moving averages like this, we typically range, and that's exactly what you see happening. We don't know what direction to take. We're not sure whether we are looking to form a trend yet or not. We did break through a flag, and we can argue that we came back to test the flag as well. So if I do that, that's the top of the flag we had broken through. We came back, and I said to you, there is a gap here, so watch out for that as well. So anyway, what we have here is potentially a top, potentially a range, potentially a cup and handle. A lot of structure here for the bulls as well as the bears. And I just want to put this level in here. That's the top of the range. This zone here is the bottom of the range. If you look at the oscillators, I remember yesterday when I said to you, when we spoke, we had the crossover pointing up. Now look, we're separated and we're crossing over and looking like we're pointing down. So yeah, that's indicating that this engulfing bar here is in play. 50-50 call as far as I'm concerned when you look at the 8 hour. If you look at the 3 hour, it just becomes a lot clearer about what the confusion is. Massive pin bar to the downside where the buyers came in, massive pin bar to the upside where the sellers came in. Until these tails are cleared, I am sitting on the fence and not really wanting to look for a trend at the moment. Now, this is all because of noise, political noise, as well as earnings season. So, you know, we had retail sales come out yesterday, which was better than expected, hence a bit of a rally. And then we had that plummet again for some reason. So if you look at this on the daily, I think this, you can really see it's a range bar. There's your range bar there. You can see long tail to the upside, long tail to the downside, small body. That's just an indication of confusion. This crossover here on the daily that is brewing on the oscillators is also not really conducive to looking for longs at the moment. So I'm in a confused state, and whenever we are in a confused state, err on the side of caution, and that is to sit back and wait for something better. There is nothing here that is indicating I have a potential for a move up or for a move down. I need to clear pretty much 43.88 to the upside, and I'm going to be very conservative here. 43.34 to the downside. When you look at the hours oscillators, just grouped here in the middle, doing nothing. When we get to the 15-minute, you'll see what I mean. We've bounced off basically a 15-minute level. I'm just going to use this level here. There's my 15-minute pin bar, and you can see the big engulfing bar off it. Very difficult to get that back above the moving averages, back into the moving averages. Now we're still in the moving averages. So I need a clear break of structure to the upside or of structure to the downside before I start looking at this. I'm more in favor of a break to the upside than the downside, purely because there is so much weekly support on the downside here that the buyers are looking to come in. The economic data is not as bad as what everybody is making it out. Feds are shouting soft landing. So there's a lot of chaos happening there. I expect it still to be volatile as people digest the data, but I think what we're doing now is we're actually just waiting for confirmation from earnings. So if the earnings starts coming out and the message is coming out from specifically retailers So banks will be less, people will be looking for less bad debt in the results, and then you're going to be looking for retailers that are increasing sales. That's going to be a mixed bag one because obviously prices have gone up, so that would by default increase some sales. But luxury goods sales, there's a lot of things that people are going to be looking for to indicate that spending is on the rise and not on the decline. And that's the only thing that is really going to drive the economy. More money gets spent, economy is going to be stronger, more profitable that the shares are, index obviously follows suit. So for me, this is big up, big down, big confusion. We need to break above 43.88 or alternatively a break below 43.40 before I even start considering. And those breaks, I don't want us to break like that. I want to break, I want to pull back, I want to retest, I want price action on those levels before even looking at this. Okay, so for me, this is a clear sit on hands until we get something juicy. Okay, anyway, hope it helps somewhat, and we will catch up with you. Well, I don't think we'll catch up with you tomorrow, but we'll definitely catch up with you Tuesday next week. Hope it helps, and we'll catch up with you later. Cheers for now.